Apple is one of our granny shots. It's a stock that we think investors need to really hold for the long term.
Hi Team Value, JJ here, welcome back. Well, today I'm going to react to a small clip from Fundstrat's Tom Lee, who's saying that Nvidia, Tesla and Apple should be core parts of a portfolio. He also has a few things to say about small caps. He's pretty bullish on small caps for this year. And so let's get into what he's talking about and I'll react to it.
We got some visibility yesterday from Apple. We've been waiting for WWDC and their big artificial intelligence unveil. Stock closed down 2%. I want to get your take on what you heard and what you saw and what you think about the stock.
It did close down 2%, but the next session, which has just been the last one as I record this, it was up more than 6% on the day. So it really went down during, that presentation, that whole presentation of Apple was during the trading session and the market didn't like it, the AI or Apple intelligence, but on the next day it went higher. So market changing their mind. There's been commentary, could have been to do with commentary on, financial media. A few analysts have come out and said that that's Apple's a buy and maybe that helped the market or people had a rethink of what was going on. It's just really hard to tell, but that was a big jump by Apple, biggest in quite a long time, that 6% move in one day. So people changing their mind, being pretty bullish on it after that to do with AI. And of course, Elon Musk came out, had a bit of a tantrum about Apple working with OpenAI, integrating it at the operating system level, which doesn't really seem to be the case actually. It's not at the operating system level. It's more like an API type situation, it seems to me, where you have a drop down, you click and get asked if you want to use ChatGPT. It's not strictly integrated right into Siri there.
Well, Apple is one of our granny shots. It's a stock that we think investors need to really hold for the long term.
Granny shots. I haven't heard that before. Does that mean if you're a granny, would you hold it until you're a granny? Just hold it for a very long time, long term. I mean, Warren Buffett's doing that. He's a grandpa. He's definitely been holding it since, 2016, I think. They finished buying in 2017, but the P ratio was way low. It was like 11 or 12 when Berkshire started buying it.
The company has always been at the center of everything that's happening around a consumer and new technologies. So to me, there might have been some head scratching because these features may not be part of someone's life just yet. But as you know, Apple gets a lot of these things right.
Just the installed base, I think perhaps maybe that's what people thought about here after seeing the presentation, and the stock went down and then went up on that next session, that their installed base of iPhones is just so huge. Most people would not have seen this presentation by Apple at all. They wouldn't have been waiting for it like a lot of people in finance and also in tech are looking at these things, but they will get the upgrade to new phones. When they upgrade, they're just going to get these things, and it's over 1 billion people are going to get this. There's OpenAI, but that's like 100 million people who are using that. But if it's integrated into Apple, and not forgetting that they also have a deal with Microsoft, the other mega cap. So they have OpenAI has these deals with both of these major tech companies, which is a first really. I think I'm old enough to remember when Apple and Microsoft were massive competitors. It was PC versus Mac, all that stuff back in the 90s really.
All right. So by the way, for the audience, your granny shot, it's kind of like almost a very easy shot. You think it's almost a no-brainer when it comes to that stock, right?
That's right. I think investors should look at it as a core portfolio holding. The granny shots is basically a thematic portfolio that buys the strongest stocks in a specific theme. So when you think of AI and millennials, Apple and Nvidia and Tesla, I mean, they're really at the center of that.
All right.
So Apple, Nvidia, and Tesla, the core of the granny shot portfolio. So I think that's what he means. If you're a granny just holding long term, and I think Warren Buffett would definitely agree with that when it comes to Apple and the other super investors who hold these other stocks. If you look through super investor portfolios, and I have made episodes about that, looking at different super investor portfolios. If you look at Nvidia, if you look at Apple, if you look at Tesla not so much. Ron Barron is one of the most famous Tesla holders, of course. A growth stock investor, really has done very well. But if you look at Tesla, not that many super investor type investors holding Tesla at this point, unless they bought it very early on. Of course, there's Kathy Wood who holds it as a big part, but You know, ARK's done pretty badly over the last 5 years. If you look at their portfolio now, it's hardly had a gain in 5 years. Thinking about their 5-year time horizon, it's not looking so good. And Nvidia, we have investors like Stan Druckenmiller, who's more of a trader. I mean, he is an investor, but he doesn't mind trading. He really does think of it like this. He said so. Nvidia is a core of his portfolio. He said he's probably going to hold it for 10 years on and off, but he definitely cuts. He cut about 72%, I think it was, in the first quarter, cut Nvidia, because he did say even last year it was at nosebleed territory, and that was around 400, and whatever it is now, it's over 1200, and then the stock split. So he's cut back, and I've seen other investors saying they're cutting back. And there's this thing of it, is it a bubble, which is what, you know, my yesterday's video was about. Is it in a bubble? And we have Tom Lee here saying that these 3 stocks should be the core of the portfolio. Now, if you're getting value out of this episode so far, I'd really appreciate it if you remember to smash that like button to help the algorithm to spread it to more people. And if you're new here, do consider subscribing to get more of this kind of content in the future.
But your sector picks when it comes to the AI trader, Nvidia, Cadence, ARM, AMD, why isn't Apple in there if you believe that it's a core holding and obviously they're pushing into the AI space?
Well, mainly because Apple is much more than just an AI company. So I don't think it's intentional that we left out Apple when we talk about AI trades, but when our clients are looking for direct beta exposure, you know, to them, the complex is Nvidia, and then stocks with high correlations to Nvidia, which are the ones that we actually listed.
So Apple, of course, has to become an AI company, and it is getting there. People are saying it's catching up. I've heard that mentioned a few times in the last day, that this, you know, new presentation by Apple means that they're catching up. They're not ahead, but they basically, all these companies have to become AI companies in, you know, over in time. But it's people are very excited about it now. But I'm thinking over the next 5-10 years.
I know what you're intentional about, small caps. You've been one of the biggest bulls when it comes to small caps, specifically the IWM ETF. I'm just looking at the small caps since the last Fed decision. They're up 3%. The rest of the market's up about 6.5%. They've been lagging all year long. Is there still a case for small caps to rally as much as 50% this year in your mind?
Oh, yeah, definitely. I mean, one thing investors have to keep in mind is small caps get hampered when investors worry about lack of visibility. You know, when the Fed begins to cut, and we actually have shown this to our clients, and the number of expected cuts begins to creep up, that has been correlated with the IWM outperforming the broader market. So the reality is the stock market is saying, look, I don't want to touch small caps until the Fed starts cutting. But in the meantime, small caps have better earnings growth, you know, close to 19% in the Russell 2000 versus around 9% for the S&P. And the median PE multiple is actually around 10 times in the Russell 2000 compared to 16 times for the S&P. So better growth, lower multiples. I mean, I think it's a great risk reward for investors right now.
So small caps, if you're new here, you might not know that I am pretty keen on small caps. That's, you know, where I like to focus these days. Small caps and mid caps. It depends on people have different definitions of small cap, but I like to think of it as more under 5 billion, around 2 or 3 billion is okay for small cap for me. And I do focus on that because of, I think, you know, looking for these great companies, small companies that have a long runway for growth, great management, and a number of other fundamentals that I look for, which I do talk about on Patreon, the Art of Value Patreon. I'll leave a link in the description to that if you want to check that out. I talk about small caps more so over there than here. She's talking about the Russell 2000 here, which is more of a small cap index, smaller cap index. And so he's got this bullish claim, bullish projection that it could go up 50%, and it's only half a year to go. I mean, it could, but I just wouldn't like to project that an index like that, a small cap index, would do that by a certain time. That's really why they have him on these programs, is because he's willing to predict. Even if he's wrong in 2022 about the bear market there. He's just kind of a perma bull, and mostly over the long term, you know, share markets go up.
But aren't they also more rate sensitive and also more sensitive to the higher cost of capital and the higher for longer environment? I mean, you keep saying that investors don't want to touch them until the Fed starts cutting. We don't have any clarity. We might get some answers tomorrow, but it's unlikely. The Fed's been very clear. They're data dependent.
Sure, but I think what you've just described, which is higher cost of money, or, you know, a high bar for borrowing money, I mean, that's the existing conditions. So when the Fed starts cutting, that starts to ease, what would investors benefit from is having exposure to things that are levered to an easing of financial conditions. That would actually argue for small caps. So it's a bit of a waiting game, but boy, I mean, I don't know anyone who's made money trying to trade this week to week. Any great ideas? All the great ideas take time to work.
Oh, I do agree with him there. That's one thing that I do agree with him. Great ideas take time to work. And I think that a lot of great investors would agree with that. If you're buying something when it's actually a low price, Bill Ackman, for example, was talking about buying Chipotle when it was cut in half. They had issues with their food safety and so forth, and sentiment was really terrible. So, and often you have to wait. You'd have to wait in that situation for a stock to go up. And if you have a thesis where things are underpriced, you do have to wait for it to go up. There's so many situations where we could think of. So I've just sort of panned him here for saying that he's just willing to predict in the short term, but I do agree with what he's saying there about good ideas, great ideas, whether it's a thesis for a stock can take time to work out. You have to wait. Patience is very important in investing. I agree with that.
I mean, wow, fair enough there. Is there any part of the small caps that you think are better than others? I mean, all small caps aren't created equal.
Well, one thing I think investors have to keep in mind is that they might think a small cap is like a weak company, but actually small caps, especially in the Russell 2000, tend to be very strong companies that dominate a smaller market. So that's why, they're not a $1 trillion company, but they may be number one.
I agree with that. Again, what he's saying there about looking for strong small caps. I mean, theoretically, if you're looking for the best small caps out there, the best small caps in the world, they can turn into larger caps and then possibly mega caps. Not many companies are going to grow to be, say, $50 billion. Very few are going to get there, but it's harder to find. It's hard to find these. And I said that's why I talk about that more on Patreon. Now, I'd love to know what you think of what Tom Lee's saying here. Do you think that these three mega caps, Nvidia, Tesla, and Apple, should be a core part of any portfolio? A granny shot, as he put it, to hold for the very long term. Let me know what you think. Now, if you're watching this on YouTube, I'm going to put a link here to a previous video I've made about Tom Lee making a prediction. Go and see that now if you haven't already. I'll put a link in the description for those watching elsewhere as well. And thanks to everybody for watching or listening, and I'll see you in the next one.